Do you want to know how to build a solid cryptocurrency portfolio? In this video, I will show you how you could invest $1,000 into cryptocurrency. Coming up right now. Hey Satoshi Scopers, Alan here. If you're new to this channel and you want to learn more about investing, trading, or anything else related to cryptocurrency, make sure to subscribe and hit that bell so you don't miss any future content. Before we begin, I just want to mention that all the information from this video is my own personal opinion. It is not financial advice and I'm not a financial advisor. However, I have one strong recommendation for you. Always do your own research before you invest any money. So before we start talking about the different types of portfolios you can have, I just want to go through with you the things you should do and you should not do when investing in cryptocurrency. What you should not do. Do not day trade. As a new investor, you should be looking to invest for the long-term gains. I know it's tempting to get your 20% gain in a day, but trust me, this does not happen easily. You need to be very experienced and do your research and know how to trade the markets. 90% of the day traders don't actually make money. Only 10%, the top 10% actually make money. And these top 10% of the day traders who make money are highly experienced and have learned to trade without emotions. This is the only way to make money as a day trader, and it's very difficult. So what I suggest you do is start by investing for the long term, and as you become more experienced, you start looking into technical analysis, fundamental analysis, and your sentiment analysis. And once you can make profit with $10 or $100, then you can start putting more money into day trading. Secondly, don't buy a coin just because it has a low unit price. For example, Ripple, it's at 80 cents per unit. So people are thinking that this coin could still go up much higher when compared to Bitcoin, which is already at $10,000 per coin. So new investors sometimes buy coins which have a low unit price, but new investors don't understand that they should be looking at the coin circulation supply and the market cap. So if you compare this, you can see Ripple is about 5 to 6 times less than Bitcoin. However, the unit price is significantly lower, but this is because they have many more coins available in the supply. I'm not saying that Ripple is a bad coin, but just make sure when you're doing your research, don't just base your buying decision on the price per coin, but instead look at the coin supply and its market cap. Lastly, don't FOMO. This is fear of missing out. So don't buy into the hype. For example, if the coin has already shot up 3 times in 1 week or 2 weeks, do not buy at this stage because the coin has already been pumped and people all over social media are talking about it, writing articles and telling you to buy. Do not buy at this time. You're too late and you're going to lose money when the market crashes. So make sure to remove your emotions and think rationally. I know you want the gains when you see the price go up by 100%, 200% or 300%, but just stay out of it and you will not get burnt and lose money. Crypto is very volatile and you can easily lose your money. What you should do, diversify your portfolio. Currently in the cryptocurrency market, there are over 1,000 coins on the market. And I can guarantee you that most of these companies will not be around in a few years. Only a few of these companies will become successful and be around for the long term. So you should have at least 4 to 5 different coins in your portfolio. In case one of them completely disappears, then you would still have 80% of your value, which is a minor loss compared to if you only had that one coin, then you would have nothing. You're done. Secondly, only invest what you can afford to lose. In my own personal opinion, I would not invest any money that I can't afford to lose. It is a very volatile market and your coin could go down to 0 and be worth nothing. So what I do is invest and forget about the value of the money. I only think about it in terms of the Bitcoin, how many Bitcoins I have. You don't want to lose sleep at night over the amount of money you have invested into cryptocurrency. Thirdly, do your own research. I know I'm giving you my advice, there'll be other people giving you their opinion, and there'll be articles telling you to buy this coin. Don't just listen to all of that without thinking about it. Just remember, always do your own research and be sure at what you're doing and be comfortable with it. Don't just go with other people's opinion and not think about what you're doing. And lastly, have a profit-taking strategy. This is very important. Have a set price for each of your small and mid caps for when you want to take profit. Then you have locked in your gains before the price goes down again. You know, crypto is very volatile, especially the small and mid cap coins. The price goes up and down more violently than Bitcoin. So what I do is I always take profit on the small and mid cap coins. And I'll explain this more towards the end of the video. Now let's get into strategy number 1. Profile strategy number 1, large caps HODL'er. So if you didn't know what a HODL'er is, it's just another word for holder. This is just a term that crypto people like to use. It just means you're holding for the long term no matter what. You're not selling. Now let me explain this strategy. I would put $500 or 50% into Bitcoin. This is because Bitcoin is still the main player. It still controls the way the crypto market moves. Whether it's going up or down, it's still dependent on Bitcoin. So it's good to have large amounts of it, as you can use it as a hedge. Now, next is $500 or 50% into large cap altcoins. Everyone has a different interpretation on large cap altcoins. Some people say it's their top 10, some people say it's the top 5, and it's all different. This is just my idea. I say top 10 or greater than $5 billion. These top 10 coins are platform type coins like Ethereum, Cardano, EOS, coins like that. So they have large market caps and they have the potential to become big in this crypto market. So risk level. I'd say the risk level for this strategy is low, as you're investing in the top 10 coins in the whole market. And you got half of your investment in Bitcoin, which is the highest cap coin that controls the whole crypto industry at the moment. So in summary, profile strategy number 1 would be the most suitable for someone who is either lazy or brand new into crypto and have no idea what they want to do. So 50% on Bitcoin and 50% on the top 10 altcoins. This is the safest and easiest strategy to get started on. After you have got your feet wet and you want to get deeper into cryptocurrency, then we can go to the next strategy. Profile strategy number 2, Diversified Portfolio. I put 300 or 30% into Bitcoin. A little bit less than before, so the risk is increasing, but the profit potential will increase by putting the extra 20% somewhere else. Secondly, $300 or 30% into large caps, and I'm going to invest the extra 40%, 200 or 20% into the mid caps, and 200 or 20% into the small caps. So what I'd say is a mid cap is a top 50 coin or coins with market caps of greater than $300 million. These mid cap coins would still considered to be steady, as most of them would have good development team, good project concept, and a decent sized following by investors. Small cap coins. I would generally invest in coins above the top 200 or with a market cap of more than $50 million. For me, anything under this would be highly risky towards, pump and dumps, and you can lose your money very easily unless you truly believe in the project. Then you could put some money into it, but not more than 20% because it's highly volatile and risky. So the risk level for this profile strategy number 2, I would say is moderate, as you're putting 20% into mid-cap coins and an extra 20% into small-cap coins. So it's increased your risk from before. So the profit potential, I would say, is now moderate to high, as you have that potential to make the extra gains on the small and mid-sized coins. But that depends on how good you do your research. So to summarize profile strategy number 2, this is the one that I personally use myself, as I believe that the risk level is moderate and the potential can be quite high if you do your research well. This is suitable for someone who has more time on their hands and wants to get deeper into the crypto market. You will have to spend more time doing the research, but it could very well be worth your time as you can make those extra gains which the large cap coins can't give you. Lastly, profile strategy number 3, the YOLO Investor. I named it YOLO, you only live once, because you can guess that it's about buying the highest risk coins, but it can give you the highest reward. So I didn't do this myself. I've had friends who did it and worked out for them, but I'm sure it's more risky and more people lose than make money. I'm not going to tell you what to do, but it's not for me. So what you do here is $500 or 50% on the mid cap coins and 500 or 50% on the small cap coins. This is what I would suggest if you're going to do it this way. Some people just go all in on the small cap coins and let's see what happens. But just to be a little bit safer, I've added the mid cap coins in there and something that's more safe. So I would still say the risk level is high, but the profit potential can be astronomically high. So if you're a gambler or you're someone who just wants to go all in, then make sure to do your research carefully first. Don't just put 100% into some random coin and hope for it to go up, because it's not going to moon. This is where most of the coins are going to fail, the ones in the small cap section. So just be very careful, do your research, and let's see what happens. So if you have chosen strategy number 2 or number 3, where you are investing in small cap coins, you want to make sure to be doing this. So this is how to reinvest your profits. So you got to take profits. So I'll explain this diagram for you. So what you do with your small cap profit is take 50% of it and keep it in the same coin or reinvest it into another small cap coin. And then the other 50%, you move it up a level to your mid cap coins, which is now safer. So next, when you make a profit on your mid cap coin, you can keep 50% of it in the same coin or invest it into a different mid cap coin, and then take the other 50% and put it into your large cap. So now with the large cap coins, for long-term investment, I don't take profit on my large cap coins like Bitcoin and Ethereum. I just keep them the way they are. The only time I take profit is in, the trading account for the Bitcoin, Ethereum and other coins that I trade. But that's separate to this long-term investment portfolio. So what you can do is on the smaller large caps, you can take some profits only when you're ready and you've done the research on your small cap coins. Then you can go and buy the small caps with your profit that are funneled in to your large caps. And once again, this is just my opinion. You can do it however way you want, but I really would recommend you taking the profits on the small and medium sized coins, as they are very volatile and they go up and down a lot. You could be up 300% in 1 week, and then the next week you could be right back down to where you started and you haven't made any gains. So take some profits, don't be greedy, and you will make some money. Question of the day: what does your crypto portfolio look like? Is it different than the 3 portfolios that I mentioned today? Let me know in the comment section below. Now that you know how to build your cryptocurrency portfolio, stay on this video, as the next video coming up will show you how to buy your first Bitcoin and other altcoins. Thanks so much for checking out this video today. Make sure to hit that like button if you thought this video was valuable. And always remember to follow the sats.